Everyone dreams of living an uncommon life, and the best asset you have to achieve your dreams is you. Welcome to the Uncommon Wealth Podcast. We're going to introduce you to people who are living uncommonly. We're also going to give you some tools and strategies for building wealth and for pursuing an uncommon path that is uniquely right for you.
Hello and welcome everybody to another episode of the Uncommon Wealth Podcast, where I'm your host, Phillip Ramsey. Today we have an amazing guest with us. The reason why I want him on the show is because he knows venture capital, he knows how to scale businesses, and he knows how to exit businesses. You know what I'm saying? That's why I want him on the show. And if you're the first time listening because of my guest, welcome. I'm excited to get him on the show. Chris Van Dusen, welcome to the show, my man.
Thank you very much for having me. I'm excited.
Yeah, man. So grateful just to get some time with you. I'd love to hear about, you're a senior partner at your company.
Yep.
I want to unpack your background, but you do have an uncommon life. You do love it. And those are kind of like the two priorities when I try to get a guest on is like, do they love their life and do they enjoy what they're doing? And are they using their experience to impact others? And so that's what you're doing. That would be uncommon to me. So tell us about your company. Tell us a little bit how you got to where you're at. And then I'm sure I have a couple other questions. Let's be honest, Chris.
I love it. Phil, thanks again for having me. So Chris Van Dusen. I'm with a firm called CECO Capital, headquartered out of Rochester, Michigan. We have offices in Dallas, Louisville, Miami, and then I live actually in Southern California in Huntington Beach. Joined the firm 2.5 years ago. That was January of 22. But before that, I've had a very, what I call non-linear way to get to be a partner at a venture firm.
You get bonus points if you say uncommon, you have an uncommon person. Yeah, there you go.
I have an uncommon way. I've not met another one with my unique story, let's just say. So I grew up in Connecticut, played baseball at a fairly high level. I played in college.
Pitcher. You were a pitcher.
Got hurt 2 years in. Sophomore year, needed Tommy Johns, decided to hang up the cleats.
Wow.
Cool thing about it is they can't kick you out of college if you get hurt. So I graduated from the College of William and Mary in Virginia with a degree in economics.
Nice.
Even in our kind of pre-show discussion, you might have been able to tell probably for me sitting behind a cubicle, being an analyst with an econ degree was not going to be my path. So I graduated from college in 2003. Continued to bartend, and then got a job at this company called United Rentals, renting and selling construction equipment. Honestly, still one of the best jobs. And really what it came down to is understanding human incentive around one singular thing. And here's what I mean. It's one piece of iron, and you're having conversations with, someone working on that piece of iron and what they need for their job, and someone who owns a $4 billion multi-state development construction company and what they need from that same piece.
Right.
And so it was this great education. I call it for a few years. And then I'll call it the family business. But my dad had been a wholesaler he retired, I think, 47 years doing it. But he used to work for this company in I think it was Newport Beach at the time, real estate investment firm. And the old president, after a merger, started a sponsor firm in Richmond, and I met him. And I remember talking to him. He was going to start doing real estate. This was before our big real estate crisis that happened. And he spins up this firm. And I joined after passing my Series 7 and 63, which, by the way, I had 6 weeks to take if I wanted.
Okay.
So that was its own thing. It wasn't much of a story if I didn't pass, but the point is I got my Series 7 and 63, and then spent the next few years running the road on the East Coast doing mezzanine debt and growth and income funds for grocery anchored shopping centers and
grinding, trying
to sell real estate products in arguably one of the hardest times to in real estate. Yeah. And so one of my large clients at the time brought me out to California at the end of 2009. And due to what we were just talking about, this real estate crisis, they ended up having some trouble. And I'm marooned now out in Newport Beach at the beginning of 2010. And why I say marooned is they decided they didn't need all the people they had brought in. So I was now unemployed living in Newport Beach.
Yep.
Awesome.
Yep. No bills at all. You have no bills you have to take care of. Are you married at this time?
Not married at the time, but I did meet my wife a month after it happened.
Okay.
We ended up starting our first company 4 months into dating, and we've been at it ever since. So there again is a very uncommon story.
Right.
When I met her, she was head of business development marketing at a law firm, and she started her own consulting firm in 2013 after we got married. And then I started my own agency in 2015. Now, the original company we started together was a consulting firm. The novel idea was my shtick, if you will, when I was out on the road. What made me different than, as I mentioned, selling against my father in the Northeast, who had all the relationships in the world, was I was the data guy. I had the data at my fingertips, and this was right at the time the iPad came out. And so you think about, you have this new revolutionary glass tablet with all the information you could ever want. How do you use it more effectively on the road for people who spend all their time?
Right.
And that was something that wasn't as commonplace as it is today.
Right.
I remember I had my ACT database with all my contacts, and I had a computer mounted in the truck. And now you had it all in this little glass that you could sit down with someone and walk through very visually. And so we were building custom applications, and we were building strategies for what really ended up becoming were all of my old either clients or my old competitors in the real estate investment banking. So anyway, did that for years. And then in 2015, I started my own marketing agency, which was really focused around conversion rate optimization and high intent media buying. So I use the analogy, everyone likes to focus if you fish, right? I don't fish, but I guess I can understand a little what happens.
I don't know either.
If you look at the rod and the reel and the bait, that's what most people think about, right? How am I going to generate leads for my business, or how am I going to generate revenue? What no one really at the time, this is 2015, was focused on was the net. And think about that, right? Like, you can go get them on the hook, but how are you converting? And the net really was the actual website. So we did a lot with what they call digitally native vertical brands, right? Which are brands that start and really grow and scale online. And so we worked with Travis Matthew, we worked with Experian, and a whole bunch of these big companies working really on the net. Right? How to, if we drove 100 people, instead of 2 making an action, 4.
Yeah, right.
Meaningful things in their business just by doing that.
It's a big deal.
And so that was 2015. And then beginning of 2017, I was introduced to these 5 guys through a mutual friend who had just started a CBD company. Now, are you familiar with CBD?
Yeah, I mean, not as much as you are, but yeah, I get it. That was the time. The gold rush for CBD.
It's funny because it's almost ubiquitous now. You can find it at a gas station or Walgreens and buy it online. At the end of 16, early 17, it wasn't like that, right? This was post the first farm bill, but before Trump in 18 pushed the second farm bill. And so it was this kind of gray area. But we scaled that business in 2.5 years to 120 employees. We were in 17 countries. We had a manufacturing facility, large office space. We're the second largest brand in the world behind Charlotte's Web. And it was an amazing opportunity. I say I got a master's degree in parabolic scale, right?
Oh, I bet.
Because the majority of those sales were online. And so if you think about the throughput of doing, $50+ million worth of sales of
right,
$80, $90 a pop, like that's a very fast time to grow. And COVID hits. Now, I will tell you, start learning about discretionary spending during that time.
Oh, man, it goes up.
Well, not necessarily around health. Here's why, and I'll give you the corollary. You heard about the health boom, but when you look at why people take CBD a lot of the times, it was around things like, acute pain after working out, or to help you sleep, or to keep you calm. And when you can sit like a crumpled piece of laundry on the couch
all the time,
go to work,
who needs it?
Bring your kids to school.
Right.
It changes their focus on spend.
Fascinating.
And the interesting thing was, this company started in 17. We ended up selling it at the end of 21, August of 21, to a publicly traded company. And this is all public record. We sold for $75 million. And at the same time, we were doing CBD. Hold on. Can we pause real quick?
Yeah, for sure.
Sorry. I could hear people coming in. I apologize to the house on that. I didn't want to be loud. So at the same time, my wife and I co-founded a liquor distillery in Huntington Beach called Surf City Stillworks. It was great. We took this model. We did vodka, gin, bourbon, rum, canned cocktails, spiked seltzers. Now, to your original question of did it go up? Sales in there went up dramatically. A lot of places were closed where you would normally do it, but I go back to the crumpled piece of laundry. You could have one or two more drinks.
Right.
You could do
Man,
more.
that's fascinating.
So you could see the seesaw happening with what was actually going up on discretionary spending during this time. And a lot of it went alcohol and cannabis.
Wow. Unbelievable.
When people celebrate, they drink. And when they drown their sorrows, they drink, and everything in between. So it's interesting. Liquor distilleries or anything in the alcohol space in general is pretty recessionary proof. It's quite interesting.
Wow. Right. Because then people get depressed and they just drink more liquor. Yeah.
Exactly. So we started that. I know. We started that in 2018, sold it in 21. And then my wife and I had another exit in 2019 around a beauty care brand in the CBD space. And then also at that time, I raised two funds in the cannabis space all around picks and shovels. So ERP systems, FinServe, analytics companies, all things that didn't touch the underlying commodity, because state by state commodity pricing is its own beautiful thing.
Oh, man. I can only imagine.
And so, so last exit 21. Back in 2017, I joined this group called Alder, and it's all around generational leadership. There's this great Greek proverb that says the world's a better place when old men plant trees whose shade they'll never enjoy. And that's really what this whole group is about. There's about 300 members across the country. And when I joined in 2017, I met this guy by the name of John Garcia. Now, John at the time was just starting this firm called CECO Capital. And so he's starting CECO. I am doing all this crazy stuff I just told you about, right? And we become friends. We get to know each other. They were actually an investor in our liquor distillery. And so we just had this great relationship. And after the last exit, we talked, and it was a great time for me to jump in and do everything I'd been doing over this kind of 5-year stretch, right? Investing, due diligence, scaling companies, right? All these roles that a traditional kind of venture partner does.
Right.
Bring those. And I made the joke, put away my rusty toolkit and join an established firm.
Right.
And so firm's been around since 2017. We are an uncommon venture firm. See what I did there?
I like that.
You like that? So there's 11 of us senior partners, and we have about 40 staff. There's really a few of us that have more traditional venture roles and raise capital and find deal flow and do power brokering in between our ecosystem of about 32 companies. But really what sets us apart is we have a management consulting firm associated with CECO, called CECO Advisors. And that's really where a lot of our partners and a lot of the team members, both in leadership and staff, spend their time. So they go on secondment, we call it, right? Their second job inside of our portfolio companies and help drive operational efficiency during this very formidable time. Because we invest in the the seed round through B, right? If we're going to play the alphabet soup game of what rounds we really focus on.
Right.
And so a lot of times they don't have these robust teams, right? Because they're on the grow.
Oh, man, yeah. They're in the garage. Yeah. Right.
And so we'll come in as, ex-COOs, myself being an ex-chief revenue officer, or, we have others that have been CFOs at big, publicly traded companies. And we get to come in and help bring that operational rigor or come bring our expertise or our ability to help scale very early on. Right. And that is very different than what traditional venture does. And, I won't run on a platform that says poo-poo to venture, but interests aren't always aligned. Right. Traditional venture. And so we're in helping founders. And for us, we really don't charge a management fee on a lot of our deals, right? Because we don't raise our money on a mandate where we say, okay, we're only going to do AI or we're only going to do industrial manufacturing. So here's a $100 million fund and we're going to charge a management fee. For us, we find great deals. We take investor capital, our capital, we put them in these deals and then we help scale them. And we get compensated obviously for being in and helping these companies. And then we sit shoulder to shoulder with our investors on receiving capital at that time. Right. There's an actual liquidity event sometime in the future.
Right. And then you have ownership in that company. Therefore,
correct.
Get the money,
Correct.
the capital. Okay. What are you looking for when you're looking at as like a business? You're processing through, like, is this a good deal, bad deal? Like, what is a company that you're like, all right, we're in, like, show me the money.
It starts with the people, right?
Mm-hmm.
I obviously love and have a bias to someone who's done it before.
Mm-hmm.
And the reason I say that is the entrepreneurial journey has been romanticized over the years, but it is extremely difficult. And I don't care whether or not, and we won't necessarily invest in these type of companies, but whether or not you're starting a financial planning firm, right? Which you've got your book of business and you want to hang a shingle, that is being an entrepreneur. You don't have to be Mark Zuckerberg to be considered an entrepreneur.
Right.
But when you look, it starts with the people. If you've done it before, if you've gone through starting, raising capital, if in fact you needed it, operating at a level of efficiency, and then finding a home and a sale, like if you know that arc and how hard it is, that is of interest to start. So we start with the people. And then number two, we look and say, does this company have the ability to not just be a lifestyle business, but to do something of meaning and size? And what's the path or the difficulty for them? And is it the right people again to actually execute that? And if the answer is yes, that means there's a good enough return for our investors to consider, right? And I would say that the vast majority of our investments are after they've proven there is some product market fit. It's already there. They need capital to scale, to grow, to put fuel to the fire. It's not usually a deal on a whiteboard with an idea saying I need the initial.
Yeah, no, right. It's not a Shark Tank situation.
No. So we look at all these things, and then we look, is the valuation that they're asking for fair compared to what they have moving forward or what they've done already. And if those things start matching, we do a now full due diligence play, which is inside the data room, meeting and doing background. I mean, there's a very long checklist we go through before we invest. But the initial, as I'm looking at a deal, are those first questions I just went through, right? Like, do I like and see the vision for this? And then lastly, because I would really consider us ecosystem investors. And what I mean by that is, do we have the ability to impact their growth meaningfully? Like, can we as CECO do something? Can our portfolio companies do something to help, right? Like, is this a service that if it went in our portfolio companies, they grow all ships as well and us, or and themselves? And then lastly, vice versa, right? Can our portfolio companies that we already have in our ecosystem help these companies?
Right. Yeah.
And so I get that matches. That's where it goes.
Valid. And so how many times do you step in and you become majority owner? Is that like 90%? And I would think that that'd be fairly high. Yeah,
no, very low. We are minority investors. A lot of times we'll end up over time becoming major minority, right? Like usually the largest shareholder other than the founders, minority owner. We're not going to get into the over 51. Everything I look at is, and traditionally the way my brain works is a supply chain, right? So we're one part of the supply chain, but there are bigger fish, or there are private equity firms that will specialize in this. And that's part of our path to liquidity is going from, we've helped shepherd it to this level, and now someone else wants it for whatever reason, right? That's meaningful to them, and want to take that majority. And that creates a liquidity event for our investors.
Ah, okay. Interesting. Okay. So let's describe a time where this has gone poorly. Like, you jump into a company and you're like, oh heavens, what did we just buy? And maybe we can talk about that. I don't know.
Here's where we're different in a lot of ways is that, and this is a gross generalization, right? But a lot of funds, right, both in venture, even private equity, you name it, run on portfolio theory. So they've already baked in a portion of their assets inside the fund are going to fail. And also, when you look at the economics of venture firms,
it's just the probability of it. Yeah,
exactly. But when you look at the economics of venture firms, a lot of times they're living off of those management fees. So they go raise $100 million. They make $2 million a year in management fees. So you have a couple GPs, right? Your couple individuals in the firm, and maybe a few staff. So they can't go and spend all their time in this one company that might be going sideways.
Right.
For us, because we're structured different, if something's going on sideways and we know how to fix it, we have the ability to jump in.
Mm-hmm.
And a lot of times we've already been so close that we can see over the horizon a little bit sooner to see things are starting to go sideways, and then come in with capital, with resources, with talent to help steer that ship back.
Oh, very cool.
And that's where the model differentiator helps very much make it so we don't have to deal or write deals down or anything like that. We have longer time horizons to be able to be successful.
Right. That's cool. And then what does your wife do currently?
So in 2012, she started a consulting firm. As I mentioned, in 2018, I was in Denver 4 days a week, growing the CBD company, coming home, spending time at the distillery. And I had my agency that really, I was not doing the best job leading.
Yeah,
so we merged those two together, and she's the managing partner. And the agency is called Parcon, PARCON.com. I like these funny names that don't mean anything.
I hear you, man.
Like CECO, as I mentioned, the story is, the couple letters of the two genus and species name for tomato. One of the partners, very early on, we'd have these really complex ideas for companies come in from these founders who are just extremely bright. And he would look at them and go, sell me it like you're selling me a tomato at the Eastern market, which is
interesting.
Right? Like bring it down to it's simple. And that's really what the idea is, like make it simple. And so that's what became CECO Capital, not Simple Capital, right? But CECO.
CECO. I like it.
And Parcon is no crap backwards.
Ah, nice. Okay.
Yeah. If you want big dog and ponies, there's other agency haircuts that will take your money to make big fancy things. Go do.
I don't know what it is about my personality, but I have a ton of marketing friends. Maybe I missed my calling, man. But definitely, that's awesome.
Yeah. So we have a 9-year-old daughter as well.
Nice.
Grade, which is wonderful. And then, hobby wise, I was telling you earlier, I play a little golf because that's just, it's almost mandatory, right? You get issued.
That's common base. You're basic. Let's go. Move on. But jiu-jitsu, that's different.
But I also train and teach Brazilian jiu-jitsu. And I will tell you, I've met a lot of people in finance and venture, and there are not a lot of people who get up and enjoy that level of physicality during the day. But I will tell you, it absolutely changed my life. Love it very much.
Wow.
Been doing it about 8 years.
So what's the future for you? Like, you've obviously had a couple successful, exits. You've jumped into this firm. Your wife's doing the deal. Like, what's your future? Is this it? Like, or you'll probably have some kind of sell out and figure out the next thing.
Yeah. If everything works out the way I have designed it in my head, this is the last stop on the train, right? Like, this is where I'd go because it's all the things I enjoy doing. Mm-hmm. And what's great is I mentioned we have 32 companies in our portfolio. Over the years, these companies will be sold. They will transition, but along the way, we'll pick up more. So the idea of being part of the entrepreneurial journey for other companies, being able to support, in some instances, mentor, in some instances, roll up your sleeves and like really be in there growing, solving problems, getting to hear stories of some of the most, from some of the most unique people about what they want to do to change the world. I mean, that's just fun to be really fun.
Right. Do you work for that? Yeah. I'm like, am I working? You're paying me? All right. I'll take your money.
Fantastic. So, doing that right. And we continue to have, access to capital to continue to invest in more companies, then that just kind of never stops. You just continue being able to do that. And that's a really exciting thing, right?
Yeah, good.
I do travel a lot from a sourcing deal and investor perspective. And maybe that will start slowing down as time goes on. Cause I don't think, 10, 15, 20 years, I want to be at that same pace traveling the country. Yeah. With that said, doing the majority of my role, right? Fundraising, which is capitalization and finding deals and helping these companies. Yeah, I could do that hopefully until there's no more ability to do it.
Definitely an art for it, because as you grow a company, there is something about it like it's your child in a way, right? And so you don't just want to give your child to anybody. So there's emotions and there's blood, sweat, and tears and everything that goes along with that. It's been very interesting on the cases that I've kind of helped with, like, okay, you're exiting your business or you're going to now retire. How do you value that? And I would say the overarching theme is you always value it more than what it actually is worth or what the next person is going to pay for it. Because
100%.
yeah, and honestly, like that makes sense to me. Because
think about a house, right? You grew up in the house,
right?
Or your children were raised in the home. The memories have this intangible value,
right?
That you almost want to get compensated for.
Yeah.
Which the market won't bear.
Yeah, that's right. That's right. That's a good point.
It becomes its hard thing, right? Because of the personal piece of it.
But I would say the people that can do this in an uncommon way, it does seem like they have more at the end of the rainbow, even when they sacrifice a little bit more up front. Like, hey, this is the right fit because it's the right person. Therefore, I'm going to discount what I think it's worth in order for this person to step into. It does seem like those people have a little bit more joy and they're more excited about what it turns into. I can think of a couple of examples now of like, holy cow, I didn't know that my child could grow to where it's at now. You know, like you get to look at it from afar and just be admiring that people are different and they're going to run it different. And that's not a bad thing. It's just a different thing. And so I like what you guys are doing. I think it's a really unique model to jump in there and go in the trenches with somebody. And that to me is another reason why I think you're a good fit for the show, because that's what we're doing here at Uncommon Wealth. Is like, I don't care what your deal is. I don't even care what's in your wallet. What do you want to do with your life? And what do you want to do to make an impact and make it fun for you? And if we can get paid for that, like that's a huge win. And at the end of the day, like we're all trying to impact other people with the experience that we've had to further not only ourselves, but other people. And there's joy in that. So I like the model. Okay. So if our listeners wanted to hear more about CECO.
Yeah. CECO.
Yeah. Mm-hmm.
Uncommon name.
Yeah. I love it. And I hate it. Let's be honest.
Yeah. Happens.
How would they hear more about the company, you, all that?
Mm-hmm. CECOcapital.com is the website. My email directly, C Van Dusen, which I can either put in the notes or we can add at CECOcapital.com. Happy to talk to anyone who would like. On LinkedIn, I'm Chris M. Van Dusen. And the reason I say that is I do a lot of thought leadership. I write a lot of different things. Great way to get in contact with me as well.
Great. Okay. Well, Chris, I appreciate your time today and good luck in the future. I'm grateful just to get to know you and hear a little bit more about your uncommon path. But you've been listening to the Uncommon Wealth Podcast. Till next time, be uncommon. Thanks for listening.
That's all for this episode, brought to you by Uncommon Wealth Partners. Be sure to visit uncommonwealth.com to learn more about our services. Don't miss an episode as we introduce you to inspiring people who are actively pursuing an uncommon life.